Pursuits by Skoda, only on Bloomberg Quint.
Hello and welcome to Bloomberg Quint. Ujjivan Financial Services came out with a good set of numbers with the net interest income rising by almost 18%. Joining us to dissect the results, we have Ittira Davis, the MD and CEO of the company. So if you can tell us what contributed to your earnings and what went right and what went wrong.
Hi. The year was good overall. The fourth quarter is always a good quarter for us because that's when business tends to be the best from the 4 quarters. So we had good loan book growth in the fourth quarter, but overall the growth of the loan book is 46%, which I think is quite a good level of growth, and that gave us a good income and pushed the business ahead. It would have been better if we were able to control the costs, but the costs are due to several of the new branches that we opened during the current financial year, the 18-19.
So what kind of traction are you looking at for your MFI business?
Yeah, the MFI business is right now about 85% of our overall book. In terms of size, it will come down, or in terms of the position, it may come down to about 80 by the end of the current year. But we expect the book to grow by about 35 to 40% in the current year.
Okay. So, and what's the performance for your non-MFI business?
Overall, I think this year non-MFI business will grow around 40-45%.
And are the borrowers kind of leveraged, any kind of numbers?
The borrowers that we deal with, we very closely scrutinize them, and our loan process is very robust. And we ensure that wherever there is over-leveraging, we tend to stay away from such customers. The idea is that, credit is as important. So if there is a choice, we'd rather grow the loan book slightly slower rather than get into the wrong credit.
Finally, can you give us the outlook for the company going ahead for FY20?
The loan book, as I said, is expected to grow at an average of about 35 to 40%. And the idea is that we are going to try and get the cost income down. And we are looking at cost income coming down to around 70-72% in the current year, which will help, again, the bottom line. The ROA of about 1.8% in the current year, and return on equity of about 14%.
And for the listing of your bank, if you can give us the update, what it is and what the street is factoring in for the listing of your bank.
Yeah, the listing is something that is which we have to do by February next year. We are in a discussion with the Reserve Bank because obviously, whatever action is taken, we have to take care of our existing investors in the holding company. So that is the dialogue which we are having with the RBI. And we expect to get some guidance from them by the middle of June, after which we will proceed to do whatever is necessary. So that is the direction. We may have to do a small listing, in which case then that will be done. But, the discussion and the overall direction needs to be given by RBI.
Okay. All right, sir. We'll leave it till there. Thanks for talking to Bloomberg Quint.
Thank you.